So, good evening. I wasn't really planning on doing another video this shortly, but I just came home, watched my charts, and realized that most of you are probably in the dip buying phase, where you believe it's always a good time to buy dips. And maybe that's true in a bull market, but in a bear market, that is most certainly one of the most painful lessons, and you'll be continuously fucked every day, and it will yeah, you can suffer for a long time, and you can see your account diminish significantly. So this is not a video where I'll say that the indexes or stocks are going to crash further or has to crash further. Just a reminder that they can for sure, and show you why. But this doesn't also mean that it can't reverse soon, of course, because given the situation worldwide with the war and everything else, the Fed, the inflation, I think that the market is very news driven right now, which means putting too much significance on technical analysis or anything else long term is of course very very much not reliable. So keep that in mind. And one thing I also want to say is, if you see me doing technical analysis with diagonal lines, you have to realize that diagonal lines have basically no significance compared to horizontals, support and resistances. So don't put too much faith in demand or supply zones given diagonals. But yeah, we will dive right into this, and I will try to keep this very short. So I actually tweeted this, that we had a very bad close weekly on the S&P 500 last week, which you can see right here. We closed this candle below this previous support, which is not too good. So I would actually, based on this, in the midterm, expect S&P to come down to at least the 4,000 level, which would be the 100 weekly. And one thing I will show you also is that there's, oh my god, my shirt is actually trying don't mind this, but yeah. So if we look at the Fibonacci here as well, you can see that there's a long way down to the golden pocket, or also the previous high just before the COVID crash. So there's a long way down to go down there. If we then look at the OMX, the Stockholm 30 index, you can see that we've actually already come down to the previous Corona high. And the golden pocket here actually also stretches down to the, let's see, the 1700 level, which we last saw in 2015. And this is, believe it or not, a level that is not very far from the 2000s with the internet era. But yeah, this is the OMX S30. So you can see that we've already come down here. There was bullish divergence on, let's just show you, I can show you you could have played this very easily for a bounce. If we look at the RSI that flipped the resistance, we had a clearly important level here, which you can see that we bounced perfectly off of. And if you go down to a 4-hour, you can see that there's bullish divergence to be had from this low and this low to this low right here and this low right here. So yeah, given that OMXS has already come down here to the previous Corona level, I think we can go down to the golden pocket. This might just be a short-term bounce. No one knows. And if someone says they know, they are full of shit. But yeah, I just wanted to let you know that this might just be a dead cat bounce. We can continue the downtrend. And also, if the the S&P is going to go down to the pre-COVID levels. We have a lot further down to go. So yeah, I think this will be it for this video. Just a heads up. And yeah, I just wanted to let you know that there might be further downside, and given the closure on the S&P on a weekly, I'd say it's very likely. So yeah, keep that in mind. Don't keep buying the dips as a bear market strategy, because it's not. It's absolutely not. So yeah, hopefully this was short, and don't forget to subscribe, follow me on Twitter and here on YouTube, and if you liked it, press the like button, and I'll see you maybe in a day, maybe in 5 days, who knows, but hopefully shortly. So take care.